All right, as we prepare the stage, I'd like to thank again the panelists from the previous panel debate, and now we're actually gonna have one of the first fireside chat of our 2-day conference. This one is kindly sponsored by Circle, and it will be about stablecoins, the future infrastructure of the internet. And I would like then to invite on stage Teana. There we go, and a big round of applause, please, for this first fireside chat. I'll let you to introduce yourself.
Thank you so
and
much.
take care of it. Great, and just final point, after this 30 minutes fireside chat, we're finally gonna have our lunch break before then continuing with the afternoon program. Thanks again, everybody, for being here. Big round of applause, thank you.
Good afternoon. Well, good morning, I guess, since it's us between you and lunch. So we'll just drag it out. We'll take it very nice and slow. Thank you for having us. My name is Eva Szalay. I am a journalist. I work for Bloomberg and I cover all sorts of things, including crypto. Teana, would you like to kick off with a brief intro, please, and tell us what you do, and also what is the point of stablecoins?
Okay, Eva. So I am Teana Baker-Taylor. I lead regulatory strategy and policy for Circle in Europe, EMEA, including the UK. I've been there about 6 months now, and previously led a couple of different trade bodies working with our European policymakers and those in the US and the UK as well. What is the point of stablecoins? So to me, looking at the evolution of where stablecoins has, originated, the reason they came to be, and where they are today, is really more of a financial market infrastructure shift, right? So if we look at the way payments operate today, remittances operate today, and indeed crypto capital market infrastructure, the ability to move money at the same speed or move value at the same speed that we previously were able to achieve with information in the Web 2 environment on the internet, essentially stablecoins enable that exchange of value at the speed of the internet. And so what could that possibly change in the way that our financial market infrastructure is structured? So for me, I think that is, the reduction of settlement times, it is increased transparency, it is the ability to plug into emerging applications that our traditional fiat system does not allow for today. Humanitarian aid, there's a whole bunch of use cases that are emerging that kind of make the use case for stablecoins.
Thank you. I mean, originally, I guess stablecoins were used as a bridge, right, between linking the fiat and the crypto ecosystem, and for moving value from one exchange to another. A lot of the HFT guys do that. So can you sort of drill into what additional, I know you mentioned some of the use cases, but what additional use cases do you see now? And is that bridge still an important part of what stablecoins do?
Yeah, absolutely. I mean, I think, the primary use case today, somebody, gave a quote of 75% of stablecoin transactions today are US dollar based. They are the bulk of stablecoins, US dollar denominated. And they do facilitate that crypto capital markets activity. So that could be for trading purposes, it could be for yield purposes, DeFi lending, savings, etc. And I think that those use cases will continue to grow. There are some challenges when you look at the regulatory development. So for example, within MiCA, there's a prohibition on interest being offered around stablecoin deposits. But in other jurisdictions, that's potentially not going to be a barrier. So, that use case, I think, will continue to proliferate and grow. So we'll always have that capital markets activity within the crypto asset sphere. I think what's really exciting to see today is that bridge activity. And so I think if you look at what's driving that, regulatory clarity is certainly one thing. If you're looking to insert any type of financial activity into the TradFi ecosystem, regulatory clarity and certainty is important. Also being sure that you can maintain that peg that you say with reserves on hand to ensure that you're not stable in name only, right?
Not to throw shade on some other stable coins that we sometimes know.
Correct. And so when you're able to achieve that consistent stability, and Circle does that through a number of ways, which we think are best principles for stablecoin reserves. But you're then able to plug into settlement services like Visa and MasterCard, who are essentially in the business of moving money. And if you look at industries that choose to adopt mechanisms to disrupt themselves, those are industries that continue to evolve, or companies that continue to evolve, as opposed to companies that don't and turn out to be, like the Kodak moment, right? So Visa, MasterCard, programs like our colleague from Stellar is here. Hopefully he'll talk about this tomorrow. I think it's an amazing project. Stellar is a partner with MoneyGram International. So any wallet that is Stellar enabled, you can send USDC peer-to-peer, and then I send USDC to you. You walk into any MoneyGram International, store or kiosk anywhere in the world, and you can cash out.
And so do you see stable coins playing a bigger role in payments? Because there was all this, like, is Bitcoin, should it be a payment? Is it not? Is it stable coins that can actually, in your view, take some of that flow away from credit cards or, some of the sort of international payment systems?
So I don't think it's necessarily going to take flow away from. I think it will enable a speedier, more efficient, more cost-effective flow. So for example, I think I've gotten in and out of 3 taxis since I've been here, and I've paid with a card because, I will be expensing my taxi charges. And the taxi obviously wants cash, right? And we saw this in London, where the taxis would say the machine's broken, or it doesn't work, right? There's all these reasons why they don't want to accept the credit card, but the real reason is the 3% fee, right? And so, you can, tip them enough to kind of cover that fee, but that's a barrier, right? So if you can reduce those transaction charges by either removing intermediaries or using a settlement asset that is more immediate than a T+2, traditional PSP payment infrastructure, then that's great for everyone. And so I don't think that necessarily disrupts that payment activity. In fact, we've seen net new economic activity being spurned from stablecoins. So USDC was launched 4 years ago, and in that time, it has been responsible for settling something like $6.5 trillion in transactions. And if we go back and look at the data around those transactions, a lot of those are device-centric, always on type of transactions. The transactions that are either small or kind of internet-based that traditional payment systems don't plug into as seamlessly today, and also transactions that happen during the weekend or, overnight when banks are closed.
Okay, thank you. You mentioned fees, so that gives me a great in to ask, how do stablecoin providers make money? And I'm going to link it into an audience question. Thank you so much for the audience question. Please keep them coming. How do you know that stablecoins are actually stable? Is anyone sort of looking over this, monitoring this, supervising this?
So Circle is supervised in the U.S. And we're licensed in licensure. The U.S. is done at a state level, so it's a little bit different than some other countries. And we obviously have license in all of the states that require us to. When you look to
Sorry, since we're in Europe, do you require to be licensed in Europe?
So when BICA comes into effect, yes, we plan to
But
be
not right now.
compliant. Correct. Yes. So and a number of things come with that, right? You need to have an office, and it depends on your supervisor ends up being in whatever country you're, located in, etc. So yes, Circle is licensed in the UK. We have an e-money license in the UK. One of the first actually to obtain one in 2016. So we are a regulation first company. We don't conduct activity that isn't regulated by somebody somewhere. However, there aren't any rules today that are in place right now that tell a stablecoin issuer how they need to manage their reserves.
Mhm.
So Circle has issued some stablecoin policy principles probably 2 months ago. They're on our website and our policy blog. There's 19 of them, so quite a few, but it really articulates how we think the reserves are, what the best practice for holding and reporting on those reserves are. So for USDC, we hold reserves in cash and US Treasuries that are, very short-term treasuries. We publish attestations for those holdings every month. Now with the SIFT number for each one of those treasuries that we hold as well. And there's a one-to-one backing. So that money sits in reserve accounts and financially regulated financial institutions in the States. That again, there's concentration risk is addressed. It's not all sitting in one bank. And ultimately, those financial institutions are also regulated entities as well. So we don't hypothecate those funds in any way. And I think that is kind of one area where policymakers get a little bit confused between a stablecoin issuer like us and a wholesale or commercial bank. So when money comes into our reserve account, it sits there, doesn't do anything. It does earn interest, and that is one way that we make money. And so because those reserve funds are always there, if there was a run on our stablecoin, I mean, the run would only last as long as the redemptions came in because everything is held one-to-one. So the funds are not hypothecated in any way.
And just to, you sort of briefly touched on how stablecoin issues make money. Could you address that a bit more in detail? And do you think there should be some rules around how you treat reserves, like you mentioned that there isn't currently?
Yeah, absolutely. I mean, and I think that's the kind of the point of our policy principles. And in our advocacy with governments that are still working on how to bring stablecoins in the regulatory perimeter, the US, the UK, Japan, we advocate for that complete transparency, auditable, attestable accounts, how the reserve should be held, and that they cannot be hypothecated or lent or used in any way for operational reasons. So we stand by that, and we would expect to see that come forward in legislation, similar to what's in MiCA today. There are other ways that Circle, there are 3 lines of business that Circle has. We do have a yield product that sits outside of the US, and it's a security for accredited investors. And we also have an entire suite of services, API services and merchant services that allow businesses to integrate payment use cases for stablecoins into their businesses.
So not from Circle doesn't make money from issuing stablecoins.
No.
Okay, but you're happy you're allowed to make money on reserves and whatever you
We're
do
allowed
with
to
your
earn interest on
reserves.
the reserve deposits.
And
yes.
do you think that what's happening in the real world in terms of interest rates and how the sort of risk reward equation shifted, does that have an impact on reserve management?
Sure. Well, so, obviously in the US, especially, the interest rate environment has been good for us, right? And the interest rate environment in Europe, one of the previous panelists was mentioning, I think it was Binance, that the interest rate situation here is improving. We launched a euro-backed stablecoin in June, just at the cusp of interest rates becoming positive. And we did that knowing that for a period of time, even if it was a negative interest rate environment, it was important to bring a euro-backed stablecoin that is backed in that way with those reserves. So our euro coin is backed one-to-one with euros, not dollars, not anything else, just euros. And then in the future, when we become, when the regulatory pathway under MiCA is clear and in place, and we can onshore that activity in Europe, then potentially there might be some European treasuries in that mix. But the idea that we did not have a USDC equivalent in Europe, we thought we needed to address that, and so did so even though the interest rate environment was not in our favor to do so.
basically you guys were losing money on it, right?
At the beginning, yeah, we were prepared to.
Okay, so to me, maybe this is, like an indicator of how interest rates environments will change when Circle launches, I don't know, a Japanese stable coin. Maybe the Bank of Japan will crank up interest rates. Who knows? In all seriousness, you mentioned the euro stablecoin, and I noticed that on the program there is a discussion later on called a roadmap to the euro stablecoin. What's going on? There is a roadmap, but you guys already have one.
Well, I think that hopefully that panel will talk about some of the challenges and opportunities that stablecoins will face in Europe in the next coming years. Obviously, we're innovating in the stablecoin space at the same time that Europe is looking to rapidly deploy a CBDC. I think there's a lot of discussion around, how do they coexist? Should they coexist? Will stablecoins demise because now there's a CBDC and you don't need stablecoins anymore? I think the answer to that is emphatically no. We have a system today of public and private money where they coexist, and I cannot see that changing. I think that stablecoins will continue to serve different use cases than potentially even a retail CBDC will. And I think honestly, from a financial inclusion perspective, if you're using a CBDC, probably still going to need a bank account. Doesn't necessarily solve that problem immediately. I think there's some design concerns around CBDCs globally, right? There's like 105 CBDC projects that are being undertaken right now, and all looking at that. And so as those discussions continue, we're still, really probably 3 to 5 years out from anything being on the table to be adopted. And in that time, I think stablecoins will continue to solve for a number of those use cases. And then it will beg the question, if this works, then what is the reason for this other asset?
Why do you think it's one of the audience questions as well, the coexistence of CBDCs and stablecoins? If you don't think CBDCs are a key risk or a major risk, what is the biggest risk to stablecoins?
Well, I don't think that there's no risk around CBDCs and stablecoins, but I think that the risk is more focused on the consumer and payment optionality. I personally don't want to be put in a position where if we're continuing to move toward a not cashless but a less cash environment. Ultimately today, if you're holding a euro or a dollar in your wallet, that is a anonymous bearer instrument that allows you to conduct your life without surveillance, without any kind of monetary controls around how much you can hold, how much you can spend, and what you can spend it on, or potentially increase surveillance. I think there's a number of challenges when you tie your everyday kind of activity straight into the government, and I think that there's probably a way to resolve that, but I don't think that anybody has solved that yet. I think there's some other challenges around digital identity that kind of feed into the CBDC discussion. So from a risk perspective, I think that the risk is greater that we as a society and certainly our incumbent financial system and the supervisors of those systems don't allow enough kind of roadmap and runway to see what's possible. Caroline mentioned earlier when we got iPhones, we thought it was for calling people and taking pictures of our dogs, right? We didn't envision, we take a lot of pictures of our dogs. We didn't necessarily envision that we would be doing a number of the things that we're doing today. Think about all of the smartphone, smart house integrations that you have, which I still think is I'm worried about surveillance about that too. But I think that the possibilities that we haven't yet realized to bring better financial services, better payment optionality at a cheaper price to more people, I don't think that we can possibly know what all of those are today.
We had a chat earlier this year, actually, and we did a panel along those lines. And I remember you saying that stablecoins, are basically the regulatory lever or the lever that regulators have over crypto. Is that still the case, do you think? And the way the regulatory framework is evolving in Europe and elsewhere, is that environment shaping out to be quite friendly towards stablecoins and crypto in general? Or do you think that that's a lever, stablecoins are a lever that regulators cannot and will at one point really pull on?
Yeah, so from a lever perspective, I think it's not necessarily about, like a collateral, right? It isn't it happens to be for, I think, a number of reasons. The element around or the type of crypto asset that regulators and legislators are able to understand. It's fairly cut and dry, right? When you look at other types of crypto asset activities, it's a little bit more complicated. And so I think that when you look across, the UK and the US at the moment are, in the middle of putting forward, the UK has put forward legislation that's moving through Parliament, which brings stablecoins into the regulatory perimeter. And we've seen 5, 6, 7 bills on stablecoins in the US over the last year. One we'd hoped we might see actually, progress further this year. But, we have it on very good authority, publicly and privately, that a stablecoin bill will be the priority in Congress going forward. And so I think that that is driven from a number of things, but one of them I think is that bridge activity, right? And if you're going to have, large infrastructure players like Visa and MasterCard and PayPal and Stripe and checkout.com and all of these, intermediaries that facilitate our payments ecosystem, using this or using stablecoins as a settlement asset, then it begs the question, well, maybe we should have some guardrails around this. But what I haven't seen from both the US, Japan is another example, and the UK, it really seems to be a first step toward regulating the industry in a balanced and proportionate way. And all three of these jurisdictions I just mentioned see the value and want to get it right. And I think that's really positive. So then when you take a look to Europe, I think Europe absolutely did an incredible job of that first mover advantage, providing clarity across the entire European region. And there's a lot of opportunity there for market participants who now have greater clarity. When it comes to stablecoins, the bar is very high. And I'm not suggesting that the bar shouldn't be high, but I think it will. I think Gabriel, mentioned that we've got legislation. Now we're going through, the level 2 negotiations at the regulatory level, and what's in legislation and what can be done practically on day one, there might be some gaps. And so I think that, part of the risk of being in that first mover position is that you're going to be figuring that out in real time. And I think some other jurisdictions are watching to see how that happens so that maybe they can close those gaps.
Thank you. Excuse me. There's an audience question. What's your opinion on stablecoins being regulated as money market instruments, as hinted by the Fed a couple of weeks ago?
I have a very different view around, sure. In the US, there isn't an e-money provision. There's no such thing as e-money. And so I think when regulators start to look at putting together, well, not regulators, legislators, when you start to look at laws on how to approach, putting governance around something, you look around to see what this looks like. Does it look like some other thing? And especially in financial services regulation, there's a propensity to kind of cut and paste, which I don't think is as effective as bespoke regulation would be. But bespoke regulation takes time and is harder to do. And so I think if the US had an e-money system that was similar to the UK or Europe, I think that those comparisons probably wouldn't be made as readily. But because there isn't that system, money markets look reminiscent of what stablecoins are.
Thank you. And thank you for the water. Apologies for the swan's death here. A slight cold. One other question I wanted to bring up is, what's the difference between exchange tokens and stablecoins?
Well, so an exchange token can take the form of a stablecoin or not. So, I think, and Binance, if you're out there, if I get this wrong, please hold me to account. But BNB is an exchange token. It's a token issued by the Binance exchange. Binance also has a stablecoin, BUSD, that I believe is a partnership, and so it's kind of co-issued, I believe. But Crypto.com is also here. They have an exchange token, which is the CRO, but it is not a stablecoin. So I think they're two different things. An exchange token is a token issued by an exchange, and a stablecoin is a stablecoin. That doesn't mean that an exchange couldn't also issue a stablecoin.
How do stablecoins compare to tokenized bank deposits? What are the pros and cons?
How do stablecoins compare to tokenized bank deposits? So I think it depends on what jurisdiction you're in too. So I think one of the key kind of maybe non-level playing field challenges that we have in Europe is that potentially if BIS says, yeah, wholesale banks, go ahead, dive right in to issuing and participating in crypto asset activity, and they're able to take in tokenized deposits, they can offer a return on those. Within MiCA, stablecoins are not able to offer, an interest return on those. So I don't think that is equitable, right? That doesn't necessarily mean that stablecoins can't potentially do other things similar to that in other jurisdictions, but that's an example of where they might be different. I think the other main thing that I understand with some of the tokenized deposit products that are in the market today is that it is a representation of that particular deposit. And so it's kind of more like NFT-like in its structure, because it's the deposit is one thing. So if you deposit $1,000, that's the tokenized deposit. You don't necessarily have 1,000 USDC that you could split up, right? And those tokenized deposits tend to stay within that closed walled garden environment. That's not to say that different products might be developed in the future, but I think those are the primary differences today.
Okay, thank you. We are out of time, unfortunately, but please give it up for Teana. And thank you for bearing with me with my cold. Apologies. Yeah. I think it's lunchtime.
All right. Thank you, Teana. Thank you, Eva. Great discussion. Very interesting. And then I guess this is the moment everybody was waiting for. So thanks, everybody, for bearing with us this morning. We had a very interesting start of this two-day conference. We discussed MiCA and the impact on the industry. We discussed the AML package and what is also happening on crypto taxation. And now we heard from Circle on the stablecoins being the key infrastructure for the future of payments on the internet. So now we have a 1-hour lunch break. We will be back at 1:30 with a panel debate on the digital euro, or will that ever happen? And just to remind everybody, please do also engage with our tweets online. There is the hashtag BC4EU Summit 2022. You're very free and welcome to use it. And post your questions on Slido during the panels. As you could see, the moderator is able to see them. So even if we don't have time for the Q&A session after each panel, you still are able to put your questions in front of the moderator. And remember to take the quiz. We really want to see how much you actually know about this whole topic. All right, thank you all, and we'll see you back at 1:30 for the second part of the day. Thanks.